Hi, I'm Mike Capizzola from the Investing Channel, and welcome to IPGo, the show where we take a look at the IPO world, past, present, and future. It's been another very interesting week in the new issues market. Rising bond yields put pressure on the valuation of growth and technology shares, and we saw some wild swings in the value of the NASDAQ 100 index as a result, which created uncertainty and hesitation on the part of the investors. They say markets hate uncertainty, and none more so than the IPO market, which might help to explain the performance of Oscar Health. The much-fancied health insurance platform priced its IPO at $39, securing a valuation of $9.5 billion in the process. The roadshow and fundraising went well, and there was sufficient demand to push the issue price $5 above its expected range. However, the stock failed to pop on debut. The shares opened at $36, printed briefly at $36.77, and finished day one at $34. They went on to trade at $30.50 before bouncing modestly. Investor confidence is a fickle thing, and without it, new issues rarely do well. Elsewhere, a business dubbed the Amazon of South Korea, Coupang Incorporated, which is backed by Japan's SoftBank, has chosen New York for its IPO. The company is said to have aggressively ramped up its pricing from the indicated IPO range of $27 to $30 up to $32 to $34 a share. If it gets to the high end of that range, it will achieve a price-to-sales ratio of 4.3 times, which would place it ahead of Amazon, though below that of China's Alibaba, which trades on a multiple of 7 times sales. Coupang could be valued north of $50 billion, quite a feat for a loss-making company. However, Coupang doubled its revenues in 2020 to $12 billion, so it is growing. The deal is being managed by Goldman Sachs, Allen & Co., JP Morgan, and Morgan Stanley, and on paper it should do well, but that's also dependent on what's happening to the wider market on the day it trades for the first time. There are also signs that businesses are feeling more confident about the reopening of the U.S. economy and a return to normality. Airline operating company Frontier Group Holdings Incorporated filed for IPO looking to raise $100 million for its ultra-low-cost subsidiary, Frontier Airlines, though that figure is seen as being a placeholder more than a true reflection of the deal size. Frontier Air lost $225 million in 2020. However, it generated an income of $250 million in 2019, and it's hoping for a return to frequent flying in the latter part of 2021. The company has engaged Citigroup, Barclays, Deutsche Bank, and others to help with the issue, and this will be a closely monitored test case in a sector that was among the hardest hit by the pandemic. Elsewhere, Cazoo, a UK business that sells pre-owned vehicles online, is considering merging with the SPAC IAX1, according to media reports, in a deal that would value the business at $8 billion. Cazoo's founder, Alex Chesterman, who has a track record of founding successful online businesses, set up the company just 3 years ago. IAX1, which raised $750 million when it IPO'd, was launched by hedge fund manager Daniel Ock, one of the best-known names on Wall Street, and a former Goldman Sachs banker, Glenn Foreman. Talks between Cazoo and IAX1 have been going on for some weeks, it seems. Cazoo raised $336 million in October last year and counts the likes of Fidelity and BlackRock among its shareholders. So while the $8 billion valuation might sound high, it's not impossible to achieve. In other news, commission-free stockbroker Robinhood is said to have selected NASDAQ as the venue for its IPO, though it has yet to formally file documents. Goldman Sachs is thought to be advising the broker. UK telecoms business Vodafone will spin off its tower business in Europe next week, aiming for a valuation of a little over $20 billion. There have been doubts about the demand for the deal, which sees just 25% of the tower business offered for sale. Shares in quoted U.S. rival American Tower have fallen by almost minus 12.41% over the last month, suggesting that it's a tricky time to be spinning off telecoms infrastructure businesses. That's all we have time for this week, but as usual, please make sure to do your own due diligence before making any investment decisions.